The best way to think about Bitcoin is it's the world's first example of a technology that allows individuals or corporations to tightly bind economic energy to their person. Like if, you have 100 families and they all have some money, but they don't trust each other, they don't trust their bank, they don't trust their government, they don't trust any company, but they want to keep their money. So they come up with the idea of a digital bank. You write it in software, and the digital bank has 21 million coins, and anybody can buy any amount of the coins in the bank, and that becomes their bank in cyberspace. Now, the question is, who runs the software? Well, I might trust you, but I won't trust your great-great-granddaughter. So we all run the software. Everybody runs the software, and then the software continually cross-checks everybody else. And so it's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right?
In this video, Michael Saylor will talk about Bitcoin's performance and institutional adoption. Let's catch him up.
Yeah, and in August of 2020, we were the first public company to make any meaningful commitment to crypto assets or to Bitcoin specifically. And we bought $250 million worth of Bitcoin in August. And then we followed up with another $175 million a few weeks later. We were the first. Then came Block. Then came Tesla. Then came half a dozen or a dozen other Bitcoin miners. And by about a year ago, there were maybe 60 companies that owned Bitcoin, and then it doubled, and now I think there's probably 180 companies that own some amount of Bitcoin on their balance sheet that are publicly traded. We're 10x larger than the next largest one in terms of holding, so we're the 800-pound gorilla in the space. I think probably 1.1 million Bitcoin are held by public companies, and we own about 2/3 of it. So we're the largest player. We're the first ones to actually issue digital credit instruments like these preferreds that are trading in the public market. But I expect that others will follow. There'll probably be about half a dozen companies over the next 12 months to 24 months that will follow and issue those kind of credit instruments. We welcome those companies. I mean, the truth is every single company that capitalizes on Bitcoin takes more supply. There's only 21 million Bitcoin ever. So, if Microsoft turned around tomorrow and bought $100 billion of Bitcoin, that would be great for us, right? So the more companies that buy Bitcoin, the better. Most are just capitalizing on it. They're just buying it in lieu of holding treasuries or holding cash, right? It's like a company can own real estate. A company can own any other asset. A company can own Bitcoin. So most do that. There'll be a few pure play treasury companies that will also issue digital credit against their underlying Bitcoin, but you need to have, more like $10 billion of capital before you can get to critical mass where you could do 500 million and billion-dollar IPOs of credit instruments that would be liquid in the market.
Bitcoin's price movement has hit a critical resistance zone with a massive sell wall forming above the $105,000 level. Traders across major exchanges have noticed a dense cluster of ask orders extending up to $112,000, effectively capping Bitcoin's upward momentum. Despite attempts by bulls to reclaim higher ground, the price remains trapped below this barrier, prompting concerns about potential manipulation or deliberate price suppression. Analyst Skew highlighted that the wall of sell orders appears strategically placed to keep the market under pressure, suggesting this could be a classic tactic to push prices lower during Asian trading hours. Further fueling uncertainty, data from material indicators suggested that the owner of this huge sell wall might be attempting to drive Bitcoin's price into the $98,000 to $93,000 range. However, analysts caution traders against panic selling, noting that Bitcoin's bounce from its 50-week simple moving average could still signal longer-term bullish potential. Meanwhile, the broader financial market's attention turned to the U.S. Supreme Court, where judges began scrutinizing international trade tariffs. Speculation that these tariffs could be overturned has put both stock and crypto traders on alert, as such a decision might ignite volatility across global markets.
So we just take an asset that's very volatile that we expect Bitcoin to go up 30% a year for the next 20 years. we expect it to go up more than 20% forever. So it's not a problem for us to give 10% dividends because that's our business model. But for the investor would like to see that we're 5x or 10x over collateralized, right? So for every $10 billion of Bitcoin we own, we might sell $1 billion of that credit with that $100 million a year dividend stream. And so you're the credit investor, you're just getting that pure yield. And from our point of view, we're paying 10 and we're getting back 20 or 30, right? So it makes sense for us. And then, there are other flavors, like we created this product, Stretch, STRC, which is a treasury credit instrument. The idea of that is it's just a high yield bank account. Like we'll give you a bank account or we'll give you a money market type instrument that pays 10% yield. And the idea is for it to be a 1 month duration. So we strip all the volatility away. We target $100 par value. You take cash that you don't need for 6 months, but you want to earn 10% instead of earning 4%, and you buy that instrument. Now, you don't want the upside of Bitcoin. You don't want to buy, a lot of people don't want a 20-year bond. What they want is they want a money market, right? And so you don't want infinite interest rate duration. You don't want delta. You don't want volatility. Just give me pure yield. That's probably the most refined digital credit instrument. So what our company's doing is we have a lot of capital. We have about $70 to $75 billion worth of Bitcoin on any given day. We sell those credit instruments, and we have about $6 billion of those credit instruments outstanding. They're so way over collateralized. Then we generate various types of dividend streams or upside with them. As it turns out, we expect Bitcoin to appreciate 30% a year, but we don't pay more than 10% to 12% dividend streams. So our common stock shareholders get the excess. So what happens is we take that volatility and performance of Bitcoin and we strip the volatility, the risk, and the performance off, and we sell you 10%, 12%, 8% as a credit investor. And then the extra performance and volatility goes to the equity. So MSTR, which is our common stock, is more volatile, higher performance than Bitcoin. And what you have is some people want more Bitcoin performance and they want to be on a roller coaster and they buy the common stock. And some people want less and they just want the pure dividend stream. And of course, the people that just love Bitcoin and they don't want any counterparty risk, they don't want to own a security, they just buy the commodity Bitcoin. And so that's how we sit in this ecosystem.
Bitcoin's biggest whales still make waves, but they no longer dictate the market's daily rhythm. Since the launch of spot ETFs in 2024, inflows and outflows from these funds have become the most powerful driver of Bitcoin's green or red days. When ETF demand surges, Bitcoin often climbs. When redemptions rise, prices typically follow suit. BlackRock's iShares Bitcoin Trust alone manages more than 800,000 BTC, meaning that ETF flows now rival and often outweigh the impact of individual whale trades. Exchange liquidity plays an equally important role. With balances sitting at 6-year lows near 2.8 million BTC, the market reacts sharply to large orders, even when they come from smaller players. Thinner order books magnify price swings, and that means any aggressive buy or sell can ripple through the market far faster than before. Meanwhile, whales themselves have adapted. Many now split trades or move through over-the-counter desks, hiding their footprints. The real color of Bitcoin's day often comes from macro shifts, the dollar, US yield, and investor risk appetite, all blending with ETF flows to paint the chart either bright green or deep red. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.